For years, investors have judged technology companies by revenue growth and profits. But now, in the AI race, there is another metric that's becoming just as important to watch: capital expenditure, or CapEx. Why? Because AI doesn't just require smarter models, it requires a lot of investment in data centers, GPUs, networking infrastructure, electricity, and specialized chips. Let's look at the quarterly results recently reported by Microsoft, Google, and Amazon. Microsoft reported another outstanding quarter. Overall revenue grew 18%, the cloud business Azure grew 43%, driven by surging AI demand. The company indicated that it expects to invest $175 billion in capex in 2026. Google also delivered strong results. Overall revenue grew 24%, Google Cloud revenue surged 82%. Their capex projection for FY 2026 was increased to $200 billion. Amazon also reported strong revenue growth of 20%, with AWS revenue growing 37%, the fastest in more than 4 years. The company expects to spend $220 billion in capex in FY 2026. In fact, the CEO indicated that this elevated level is likely to continue into 2027. Now, here's the interesting part. Investor reactions to the results were not same for all the companies. Microsoft was rewarded with a massive jump in stock price. Azure's accelerating growth seems to have convinced investors that its AI investments are already translating into revenue. Amazon was also rewarded. Despite announcing a large capex plan, investors seem to focus on AWS's strong growth and the CEO's message that the demand for AI infrastructure will continue to exceed supply. In other words, spending looked like capacity expansion, not just cost. Google, however, was punished by investors. They seem worried because Google reported a first time in decades negative free cash flow. That makes investors uncertain about how well this expenditure will pay off. So that's the important lesson. Investors don't reward or punish companies simply for spending more. They reward companies that can demonstrate returns on that spending. If capital expenditure is backed by customer demand, accelerating growth, and future cash flows, investors are more than willing to support it. If not, they become cautious. So if you're watching the AI race, don't just focus on who has the most advanced AI model. The AI race is not just a software race. It's rapidly becoming an infrastructure race. Who do you think is best placed to win this race? Tell me in the comments.